All right, guys, what's going on? Thank you for tuning in to the BlockRoots YouTube channel. On behalf of my partner, Josh Rager, and I, we just want to thank you guys for all of your support. We've grown tremendously over the last few months. And this one's going to be a little bit different because my face is going to be on the lower right-hand corner of the screen. So you'll have to bear with me as I make it through my awkward phase. But many of you are already familiar with my face if you follow along on Twitter. My name is obviously Ryan. I'm Kennering Clark on Twitter. So this is how it's going to be from now on. And anything that normally would occur behind the scenes, like me scratching my face or making a funny face, is now going to be fully transparent. So anyway, there's a few things that I want to talk about, and you're also going to see that I point at the screen a lot of the times. I want to talk about the concept of, so obviously we're going to talk about where we currently sit. We're going to do a little bit of a brief analysis. But then I want to talk about a really important question that you should always be asking yourself, and that is it worth it, right? This is the concept of risk reward. So is it worth it, right? Is it worth it in this instance right here to take a long, okay? And you have to bear with me as I talk with my hands because I grew up in an Italian and Greek household, and that's just how things were. So is it worth it, right? As you can see on the screen, there's a few things that I have written down, right? We're always looking for contextual risk reward, okay? So we've gone over the concept of market context before in our previous videos. For those of you that are subscribers to the BlockRoots platform, you're all familiar with this concept of context, right? So one of the major important parts of context is market structure. So with crypto, a lot of the times we're relying on these major significant, these reaction zones, or as I also said, identifying areas of significant change. So these are significant levels where things majorly change when we're either finding support, finding resistance on them, or passing through, right? So the story is changing as we're passing through these levels. Okay, so we're always looking for contextual risk reward. We're always asking ourselves, is it worth it? Okay, or in this case, I think, which a lot of people are doing, or are we potentially trying to pick up nickels in front of a steamroller, right? Are we looking for what is a very incremental gain for potentially a very large loss? Okay, so we're going to go over these concepts. We'll briefly touch on where we currently sit. And then lastly, we're going to cover the most recent and first edition, rather, of the newsletter that we put out, because for those of you that are unfamiliar with this, we've put out something called BlockRoots Crypto Insights, and every single Wednesday we're going to be putting out an issue. This is sort of a higher time frame breakdown, looking at the market from a spot perspective, futures perspective, and options perspective. Okay, so we're looking at market macro structure and micro structure to try to really give you some actionable insight moving forward for the week. And we also share very specific ideas for what we think is potentially setting up, okay? So two of them actually had a great deal of success. So we'll go over those very briefly, SNX and Kava, which is actually up, I think, now over 20%. I think at one point SNX or Kava was up almost 50%. So, and these are assets that actually have a good amount of volume to them. They're not just, very thin assets that when you throw a little bit of money at them, a little bit of money at them, they're going to pump. So these were things that were actually, they looked like they were brewing beneath the surface to potentially give us some upside, and they gave us a significant amount of upside. So really quickly, on the higher time frame, not much has changed, right? When we look at this structure naked, we're looking at us within a range of almost 2 months now, right? About 2 months now, right? So 2 month long range. If you're looking at this just from a structural standpoint, the highs of the range around 10,000, 10,200. The lows of the range where there's most confluence around, I'd say 8,500, right? So 8,500, 8,450, 86. It's all the same. It's a general zone. As I've said before, as we've said on BlockRoots, we draw lines to keep things clean, right? There's sort of this preference towards clean charts. For me, there's a preference because it allows me to it frees up my mental bandwidth. I don't have to process too much visually. But lines are always zones. That's what they are. They're zones where we're looking for this sort of behavior or interaction to occur. So this is the range that we're looking at for the last 2 months. So anything within this range that occurs on the lower time frames unless you're just trading it intraday and you're trading the range, right, from high to low, you're trading the auctioning process within this, right? So we see that, you know, the point of control is pretty much where most of the volume occurred within this structure. Just a guess, right? But if we're looking within here, we see at the point of control, which is, you can't really see it on this chart because now I have all my drawings pulled up. But if we zoom in, you see that the point of control right there is pretty much the midpoint of the structure. And when you have a very evenly distributed structure like this, where it's been moving within 2 months and you have a very defined high and low and midpoint, why can't I take this damn drawing off? You know, the point of control is probably going to be at the midpoint of the structure. So that's because I had my drawing tools from something else and I had the drawing tools from TradingView, and they don't move with the chart. So anyway, higher time frame resistance, higher time frame support hasn't changed. These are your two levels where you could say that significant change has occurred, right? Either when we are passing above these levels, okay, or below them, all right? Anything within this structure is more of the same, okay? This is one of the reasons why we identify market norms, one of the reasons why we compile data. This is the same kind of concept. When we're looking at a structure that's ranging and it's giving us a very clearly defined range, play the range until something changes, but until something changes, right, as it very simply is put, it's a very obvious statement, nothing changes until something changes, right? So the point of all this is, right now, it's very easy to be bullish, especially with Bitcoin at resistance. It's an asset that more naturally, I think, moves up, right? Most assets do. Assets are easier to long for anyone first before they are to short, right? The first thing that you do is not usually go onto an exchange, borrow capital, and try to short an asset. The first thing you do naturally is it's an organic long, right? So this is something that over time has been a tremendously bullish asset. It has performed, you know, has returned asymmetrically, exponentially, right? All these things that we could describe Bitcoin as. It's the number one performing asset of, you know, now what is it, last 5 years, 10 years, who knows, right? It's in its own class though. It's not a macro vehicle yet, so it's just like a high beta stock, right? It's a high beta tech stock, as I said before. So this is one asset that has a tremendous narrative, okay? It has a very bullish narrative that fits really well right now within the macro landscape. So it's very easy to be bullish at when price is at resistance, which is, you know, more often than not what gets you in trouble, because at resistance, that brings us to the first point. Resistance is a level that is contextually significant on the higher time frame. When we're looking at this weekly structure, that is where contextual risk reward is. So when we look at this structure on the higher time frame, okay, and we talk about significant change has been this level for the last year and a half, right? In that this level has been the turning point. Okay, this has been significant for the, you know, intermediate term trend, in that on the daily, on the weekly, this has been the level that price has turned at consistently over time, right? This has been the major area of rejection. So it's very easy to be bullish at this level again, as we're returning to it for, you know, the umpteenth time. And, you know, with support and resistance, so long as we continuously revisit a level, you know, we continuously revisited a previous support in 2018. That requires buyers to consistently bid that up, right? You require more and more demand each time. Otherwise, if you consider demand static, over time, you know, that support is going to give way. The same concept with resistance. So there is an argument to be made for this being, you know, again, we've returned to this level, you know, 1, 2, 3, 4, 5 times, right? If you're looking at it like this, it's more like 1, 2, 3, 4, or just 1, 2, 3. But the idea is still the same, right? We're revisiting this level constantly, and this off a very impulsive move, off a ridiculous move to the downside. So I get it. I get the reasoning to be bullish. But from a contextual risk to reward standpoint, when we're looking at a trade and we're looking at it just from a technical standpoint, this is a more attractive short, because when we consider the potential upside we have from where we currently are, right, the upside is much smaller than the downside. So when you look at, you know, where is a target, right? The next sticky area, or the next area where there is going to be some friction. That is the high still of that previous structure, okay? It's still the high where we currently sit. So it's very much acting as resistance, right? Now, where is the nearest support on the higher time frame? Well, you could say that the nearest support, if you're looking at this weekly cluster, is around 8,000, right? So let me just get rid of this and zoom in a little bit. So you're looking at, excuse me, that is around 8,700, just looking at the low of this cluster. So you're upside reasonably from where you are. It's still very much a range play, because if you consider you're at the midpoint of the range right now, you could make an argument for playing up to, you know, I am placing asks from 90 to 80, I believe now, to 93.60. I think I have asks on Phemex. From those levels, I have about 10 orders staggered between there. And, you know, that is, you know, what that implies then is, because that is where I'm considering price visiting, that there is a long that sets up, right? A very short term, I think, intraday positioning towards that level. Okay, I don't see, I don't find it attractive enough to take that long. I could trade around my swing now, because I'm in again for the first time in a long time, actually. Excuse me, I have an itchy nose. For the first time in a long time, I'm actually in a swing position, and most of my trades have been intraday. For the last 2 months, I've been trading heavily intraday. I don't want to say a scalper, but it is, you know, I'm taking intraday swing positions, just consider it like that. But I'm momentum trading, momentum scalping. But I've actually taken what I consider a higher time frame swing short now, just because this is what is looking to me like failure at this high. And from a contextual risk reward standpoint, this is an easier area for me to define risk for a more attractive setup, right? And there's other reasons, right? It's not just because I think that this is, you know, setting up to give me a better risk reward for a short. There are many times when, you know, the next support and the next resistance might be such that the long doesn't look attractive, but actually the long could be attractive, just because of all the other things that we're paying attention to. In this case, we're seeing a lot of absorption at the highs. We're also now seeing a sort of a tailing off, or a trailing off rather, of momentum. So I think that because we're losing microstructure also, that there's a more attractive case to be made for the short, other than just this contextual risk reward, right? But as you can see, my area to define my risk for this swing position, which I will generally take a little bit more risk, or throw a little bit more risk at when I am taking a swing. And it means I'm also going to have a wider stop, because price is going to require more room to breathe. Which means I'm actually going to be taking in volatility into consideration. So my stop is actually at 1.5 times ATR, the current trend. So the ATR is around 350. My stop right now for this swing position is about $580 away, which sounds like a lot, but that's how much price needs to breathe for what I consider will be a directionally correct trade in the long run. And a lot of the times people get the direction right with a trade, but they don't give price the adequate amount of room to breathe to actually be able to take advantage of that. Because a lot of times people put on, or they employ too high of leverage to be able to take advantage of being correct, right? So they'll be stopped out intermittently because they just didn't take into consideration overall levels of volatility. I just noticed that, I don't know if I'm reading or paying attention to that or the screen above, because I have the screen flipped above. This is my first time. So nevertheless, the downside below this weekly level really drops off. You kind of have a gap. So this, to me, if you're taking long positions still, you're taking them in anticipation of the high giving way. And I could make an argument for that on lower time frames. I've done that plenty of times. I actually technically shorted support over here. And, you know, I was looking at what it was starting to become apparent to me that we were gaining acceptance at these lows more than we had previously. So typically when you visit a low, you know, you want to see an impulsive response out by buyers in this case. But this was the third time we were revisiting this low, and everything just looked completely different than it did prior. And we were beginning to see that price was gaining acceptance at these levels for a longer period of time. Not only a longer period of time, but we weren't seeing the buying response on, again, some of those charts that I look at. You know, for those of you that have been following, I use when I'm trading lower time frames. I'm going to be looking at a footprint chart, and I'm going to be seeing on a very granular level, what's actually taking place at that level as we revisit it. And we weren't seeing a very convincing buy response, and I actually got short in anticipation of this level breaking. This is only something that I would advise you doing, obviously, after you have a considerable amount of time looking at the screen, because otherwise it is that you're shorting support, which if you're a new trader, you should have sort of these default approaches to the market. And one of them that I could say is one of the most important is, you buy support and you sell resistance. Over time, you'll hopefully develop, as I've said, that viable discretion to recognize when you should be potentially buying resistance and selling support. But I would not say that that is something that you want to try employing early on. That's only something that you can employ when you have a very defined reason as to why you're doing either of those, because again, that is kind of counter trend, right? Especially in a market that, it's especially dangerous in a market that really respects technical levels, because you are fading, at that moment, you are fading potentially the flows of greater buying activity. So we never want to be against the trend, or rather we never want to be against let's say swimming upstream, right? But when you tap that level multiple times and you see that response is changing, you could make a valid case for that being the sort of anomaly in that behavior that eventually gives way. So right now on the weekly structure, on the daily structure, looking at this swing high, this is looking to me, and I'll take these drawings off, like it is, if you just want to consider it very simply, what are we doing? Are we gaining progress or are we losing progress? It looks to me, and this was the most recent support that we had formed on the daily, and if we're just looking at this from a structural standpoint, this is looking like a loss of progress to me, right? We're seeing a loss of progress throughout this structure. We have lower highs, right? These lower highs, at least, if this is going to be part of my reasoning for why this is a good short opportunity, you can think of, in this case particularly, that these levels that I'm saying are significant for my short thesis are significant for the inverse, right? So right now we're losing progress, okay? So losing progress, in my opinion, for us to become bullish again, we need to see some strength on the other side of the market, right? And what that means is that bulls, buyers, longs, whatever, need to start retaking areas within market structure, most recently, that have led to downside moves, which for me means that, and this is great because this is actually where my volatility stop is as well. It's slightly above the most recent structure. So right now we're losing structure to the downside, and I think that, while you do have an intraday trade set up potentially that hopefully fills my asks, or hits into my offers, I think that we still there's a reasonable case to be made for, there's a high probability case to be made for returning to the low, at least within this structure, which is a good area to reevaluate the trade, right? Not just to extrapolate from it and assume that we're going to break. Though I do think, after a prolonged consolidation like this that's looking like it's starting to roll, I do think that when you do lose a structure like this that's been, auctioning sideways now, again, it's not sideways because the range in this case, we've been looking at a range that's about $1,000. It's not that it's sideways, but on the higher time frame, it's been in a higher time frame consolidation. That when you lose this, when you have levels of volatility the way they are, so we're looking at daily structure, we're looking at implied volatility, realized volatility, you could look at ATR, it doesn't matter what kind of volatility indicator you want to look at. When you see that there's compression and we have this kind of sideways price action and we've been respecting these levels, what we're doing over the course of this action is we are building up fuel at the upside and to the downside, especially in a structure that has rising lows, right? Because everyone who has got into this structure has likely, if they're using structural stops, used the previous structure as an anchor point to define their risk, right? Say, for example, I want to get long over here. Okay, well, if I give price just this amount of breathing room, then maybe I'll get wicked out and price will continue, and that'll just be kind of normal volatility, right? Because where you can see right now, 91.12, if we look at the lows that I just drew, so we're looking at 87, it's about $400. So that's slightly over 1 ATR, which if you consider that out of the norm would be 2 times that, even though my short stop is a bit tighter, it's 1.5. More than likely, you'll see that in this structure on the way up, that traders have used the most recent prior low to define the risk. So you probably have stops down here, stops down here. Let's get a bit better drawing tool out. Stops down here, and you just have these clusters of stops that are accumulating at the downside and the upside, right? Upside has been pretty static. The lows have been rising. Upside has been pretty static. It's been this area up here. You likely have a lot of, number one, you have buy stops up here. And two, well, they're all buy stops regardless, because any kind of short covering is a buy stop, and any kind of breakout long, a buy stop as well. So you have this liquidity built at the upside and at the downside right now. And what this means, especially after this kind of prolonged consolidation, is one, you don't fade the trend. Typically what we've seen after a break of this, my back is getting stiff, is that you will normally have at least 2 weeks follow through. So and this is after an impulsive move. So let's just make sure that we know what we're talking about. Say we get a move through the low like this. Okay, this is not where I'm going to say, okay, you know, go all in. The same idea to the high, right? That is still, you know, that's still kind of what it's into resistance. It's not exactly, it's not showing us anything yet. What I'm talking about, you know, and let's make the bull case because I know that makes everyone feel better. What I'm talking about is this, right? I'm talking about something that is, you know, a candle that is 2 times ATR, so well above the, you know, normal standard deviation of what is considered, well, what is considered a norm, right? We're at 2 times standard deviation, 1.5 times standard deviation to the upside, okay? And when I say standard deviation, you could just use ATR. Just use anything that sort of defines a norm. So a candle like that, you might not get much of a pullback. Your pullback might be something that's flagging within a $500 range, but that's what I'm talking about, where I'm saying that this is not something I fade. Same idea to the downside. In this kind of structure, the reason why I'm not 100% about this support, even though it's been support multiple times, is because if we're testing this support now, we're breaking a previous intraday level, or rather we're breaking a previous daily structure within here. We break this whole pattern of marching upward, and after a prolonged consolidation like this, where everyone is kind of, I don't want to say everyone, but there's a lot of people that are kind of on board with the idea of Bitcoin breaking down. If people are right about the direction, they're typically wrong about the magnitude. So, you know, down it is, right? But what kind of down do we have? And more often than not, it's a move that is well outside of expectations. And that's why, you know, I hate to say this, but set up for, if we break down, set up for 7,500 in one candle, right? Set up for that, you know, $1,200 candle to the downside. And then in that case, you know, from a structural standpoint, the first level that we have to look at is this previous cluster that we have up here, our march upward. You know, you could start looking at high volume nodes. You could use really anything to determine the level of significance, whether it's through time, higher time frame swings, through volume. Obviously, you want to see a confluence between both, because what we saw actually within the last day was, excuse me, hiccup, was that the most recent move up with actually the ES, which is actually putting an upside price action now, but we're looking at this daily structure back here. There was a lot of presence right here. And you have to pay attention to the ES and the S&P 500 right now, because there is a great degree of correlation between Bitcoin following as a laggard. This entire cluster that led to sort of this double distribution cluster down here, this was, it looked like excess if you looked at it on a volume chart. So presence, right, structure, but not much volume up there whatsoever. So you want to see that price and volume are confirming each other to see that price is being accepted in a level. When you see something like that, what it says to me is that buyers and sellers weren't interested in doing business up there. So we might have spent time up there, but buyers and sellers didn't seem really interested in those levels at the time. We ended up auctioning down from them since, and now we're potentially treating that as a potential upside target. But just bear all this in mind, right? Is it worth it? Right? Where are we right now? Where are the major significant swing points where things are, or changes upon us? So where is significant change right now? Here's significant change, right? On a weekly, significant change is at these levels. If we do something like this, right? Obviously if we're up here, that's significant. But if we're starting to gain acceptance above a previous swing high, right, above this previous cluster, especially after being stuck within it for so long, you know, that is significant. That's not something you want to fade. The same idea to the downside. So that covers that, guys. Hopefully, you know, this has been enjoyable. Thanks for tuning in. You know, the last thing I want to talk about is our BlockRoots Crypto Insights newsletter that we put out every Wednesday. you could see that the follow-up that we actually put up to the first one. So just as a run through, the first thing that we do is do a higher time frame, sort of 10,000 foot view, where we're looking at Bitcoin from a spot standpoint. As I said, we're looking at futures markets. We're looking at, things like contango and backwardation, what they mean as far as sentiment goes, because they don't have sort of the same, purpose, or rather they don't give the same feedback as they would in traditional markets. If anything, it's a sentiment indication or an indication of sentiment. We look at the options market, because we're going to be paying more attention to that now that the options market is maturing more, or is becoming a more mature market rather, as that grows in depth. So we talked about in the issue that's going to be coming up, I'm going to be diving into skew, because that's something that I've been talking about for a long time now. I'm noticing that it's becoming more popular in crypto to refer to what's going on with crypto options. So we're going to talk about that in the issue that's going to be coming out this Wednesday. But then, as you can see, we actually lay out, so we'll get all past this, we lay out ideas. So we're laying out what we think are good opportunities that are setting up in the near future. And the pick of the week was actually, so we can go here, pick of the week was actually Kava. And when we did this, Kava was at, let's just look at this chart really quickly. Kava was at 10,656 sats. And right now, we're just going to go to Kava and see how it's performed. So 10,656. And we're looking at, that was about a week ago. So 10,000, it was just, let's see, where are we? 10,656, right? So we were right down here. And since then, we're actually up 33%. Let me just double check that. That was the price. That was, yeah, so that was, okay, yeah, perfect. So we're up about 33%. And what we're trying to do is share ideas that are not thin, that have a good amount of volume behind them. Not something that has $100,000 trading volume on some random exchange. This is on a few exchanges. And the most important thing is it's kind of part of the flavor of the month, which happens to be DeFi. And there is this proxy trade that exists within crypto a lot between things that are correlated. And, the flavor of the month is, back in the day, it was mainnets. These protocols that had, like I said, I use the term, putting dog toys on the blockchain. It's whatever it is. It's a flavor of the month. It gets overly hyped. It's what we see right now with DeFi, something like Comp. And you can bet that 99% of these things will have horrible endings. That's the way it is. That's my opinion. I've always held that opinion, that until crypto, and I use Bitcoin as, when I'm talking about crypto, I'm talking about Bitcoin. Bitcoin is the chosen asset. It is the most respected one. Of course, there are VCs that are looking at altcoins right now as great investments in the long run. But until crypto changes with regards to Bitcoin, and Bitcoin, gets itself on CNBC every day and starts seeing a ton of new retail investment come into the market, I don't think that anything is going to grow past a certain point. I think it's just all this balloon that's getting blown up, but we're not really changing much, right? We're just inflating it slightly again, but nothing is really changing, okay? Until Bitcoin, in my opinion, makes a major change in market structure, which you could say reasonably would be right here. But I think that alts don't really experience an incredible markup again that is prolonged and that you could just buy resistance during until we see a break of the all-time high. And, that's an if, obviously, but I think that pretty much locks it in at that point, because at that point you're going to have a $21,000 Bitcoin. A lot of people don't even know you could buy Bitcoin in increments. They log on to Coinbase, they log on to their favorite fiat exchange, and they're thinking Bitcoin, or this 5-cent asset with an incredible story, right? We know how it goes. And if you were paying attention to equities recently and you saw all of these pumps that were occurring with assets that were going into bankruptcy, it just proves one thing, that human behavior that makes assets pump, it might go from one market to the next, but it's never going to die, right? So when all attention is back on crypto again, and when people are greedy, these pumps are going to constantly occur, right? At varying levels, but when Bitcoin makes an all-time high again, you heard it here, you probably heard it a few other places as well, but that's when you'll see alts put in again. 1000% days, right? Remembering going back to the early days. When I came into crypto 2017, I had some fun with VeChain, with ICX, even Ripple, as much as I hate to say that. You know, it was much simpler time, right? An idea went a long way. So that's that, guys. Thank you for tuning in. Hopefully this was easy. This was easy for me, but hopefully this was good on your end as well. All right. So as always, exercise proper risk management and trade effectively. Until next time, thanks for tuning into BlockRoots.